Welcome back. Here with us on Urban Debate on Mirror Now, and joining us on the broadcast this evening is Nilesh Shah, Market Guru, MD, Kotak Mahindra AMC, on the expectations from RBI's policy meeting tomorrow. Thank you very much for joining us here on Urban Debate. The RBI Governor himself has made it clear that one should be prepared for a rate hike in June policy. The question is, how much?
So the rate expectation for tomorrow's rate hike is somewhere between 40 to 50 basis points. RBI has already raised in midterm policy by about 40 basis points. So another 40 to 50 basis points is expected by the street.
RBI opted for off-cycle rate hike to avoid a steep hike probably in June. What are the markets expecting in the entire calendar year if 50 basis points comes tomorrow?
It's going to be conflicts of many things. If you look at today's spread of 10-year and 30-year security over overnight rate, then probably market is expecting anywhere between 125 basis point to 150 basis point, excluding 40 basis point already done. But life is not going to be so simple. One function will be what happens on the inflation trajectory, which is linked to oil prices as well as what happens to Russia-Ukraine situation. The second factor will be what happens in US. Will US Fed tighten more than priced by the market as employment and housing markets are indicating? Or will US Fed tighten less than what is priced by the market as the first quarter GDP came at negative 1.4%? So to a great extent, events happening will decide what RBI will do. But as of today, street is expecting tightening by the year end anywhere between 125 to 150 basis point.
Mr. Nilesh Shah, banks have been quick to increase the lending rates, making our EMIs go up, but a bit slow on increasing deposit rates. Why so?
Well, today, I believe 40% of banking loan is linked to floating rate benchmarks. Now here, banks don't have to do anything. Then pricing gets adjusted automatically. To a great extent, housing loans are on floating rate benchmarks, and hence repricing happens automatically. Now, today there is surplus liquidity in banking system, though it's coming down sharply, and which is where probably banks are not increasing deposit rates because there is more than adequate liquidity in the system. As liquidity gets tighter due to FX outflows, CRR hike, and other RBI action, I'm sure deposit growth will also increase.
Markets have been a bit nervous ahead of the policy decision. What's behind the weakness that we are seeing these days?
Well, market doesn't have to just worry about RBI's policy action tomorrow. There are many other factors which is compelling market to fluctuate. One continues to remain oil prices and also what happens in Russia-Ukraine situation. The US Fed rate also I talked about. Corporate earnings trajectory impacted by inflation also is a worry for market. Today there are so many uncertainties for the market that it is difficult to figure out why market is going up or down.
Rupee has reached an all-time low against the dollar. What's the outlook given the outflow of foreign funds?
So essentially, if you look at rupee's trajectory, it is like our age. Every day it will continue to be at all-time high level. Our inflation differential vis-a-vis our trade partner is loaded against rupee. It is the destiny of rupee to depreciate because of the inflation differential, and hence will continue to depreciate in one way or another. Earlier, we used to depreciate at high single-digit level. Now we are depreciating at low single-digit level. The depreciation of rupee is kind of foregone conclusion curbs the inflation differential. Unless until our inflation and productivity starts improving more than our peer group, rupee cannot appreciate on a sustainable basis.
Now, given the geopolitical situation and the uncertainty, World Bank has cut India's economic growth forecast to 7.5% for FY23. Do you see RBI also slashing the growth forecast tomorrow?
World Bank had, overestimated India's growth rate earlier. Now they have revised it downwards in line with other markets. We will still be the fastest growing major economy in CY22 or FY23. This is second year in running. My feeling is that RBI will probably revise upwards the inflation range and keep growth rates intact or marginally make adjustment.
All right, Mr. Nilesha, appreciate you joining us here on Urban Debate on Mirror Now this evening. So the expectation is that the rates could be hiked by 40 or 50 basis points by the Reserve Bank of India tomorrow. It simply means our EMIs will go up for sure once that is passed on to the consumers.